Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and success strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by realcrowd.com. If you need crowdfunding as a sponsor or investor, check them out at realcrowd.com. Well, today we're going to talk about retail and retail real estate. Now, retail has been an exciting topic. I mean, everyone is interested in it. All the bad news over the press, people really concerned about store closures, about bankruptcy, about vacant big boxes, especially in some of the very tertiary markets, what's happening with some of their retail. But then at the same time, there is a lot of excitement about retail. You know, it's a changing world, and it's not all doom and gloom. And there's a lot of people excited. And one of the things I like to think about retail real estate is it's good real estate typically, right? It's main and main, and it's got utilities, and it's flat, and it's got good exposure traditionally. So there's a lot of people interested in changing use and redeveloping a mixed use. So I think retail is a very exciting topic at this day and time. Well, please welcome my first guest. We have an expert on commercial real estate and on retail, Barbara Denham. And Barbara is senior economist with Reese, and she's joining us on the phone. Barbara, thank you for being with us. Thanks for having me. Well, Barbara, retail's kind of a mixed bag, it seems, out there. How is it really performing? You know, if you read the press, you think that the sky's falling. What's happening with vacancy and rental rates?
Well, I can report that after surviving what many have called the retail apocalypse, there were so many store closures in 2017 and early 2018, and yet our retail statistics showed positive occupancy.
Wow.
Which surprised many, but it just because most of our properties are more in the bigger markets, and most of the store closures were in more rural markets. Mm-hmm. However, in the second quarter, we saw significant negative net absorption in the retail space of over 3.5 million square feet. So we really saw the impact of the store closures on the retail statistics in the second quarter, unlike we've seen over the last 5 quarters. And most of that was driven by the Toys R Us and the Babies R Us store closings.
All right, so now I'm shaking in my boots over here.
Yeah.
But it seems like a lot of those are in really good locations. So, what do you guys expect moving forward then for vacancy and absorption?
Well, the vacancy rate for the malls went up by 20 basis points in the second quarter. That was like the mall vacancy rate had been trending upward, whereas the neighborhood and community shopping center vacancy had been flat, and that too went up by 20 basis points in the second quarter. However, we do think that most of the store closures for the Toys R Us closings were in the second quarter. So we're not going to see quite that strong of a response in the latter part of the year. It'll probably stay flat, maybe a little negative, but not like 3.6 million square feet. And overall vacancy has been well served by the fact that developers aren't building new malls or new neighborhood and community shopping centers, and there have been other users going into retail space, and we've been talking about that for a while. But by and large, we have seen a widening gap between the better retail markets, better retail locations, and those that are not well located. And those markets that have a lot of tourism certainly have been doing better than those that have very little tourism.
Yeah, and it's interesting that you noted that the vacancy is increasing more in the malls than it is in the neighborhood shopping centers, because a lot of that's kind of grocery anchored. Some of it's necessity, but it's also just real convenient to the shoppers. They're not having to go to a big mall, right?
Sure, yeah. It's like your hardware stores and your pizza places where you can get a quick slice of pizza, those kinds of like very necessity type retail.
All right, you're making me hungry now, Barbara. Quit it. What about retail rates, rental rates? What do you see?
Well, the retail rents have been very, very slow growing, but they haven't been declining too dramatically as you would expect. So the rent growth, even in the second quarter, was a positive 0.2%, which is almost saying it was zero. And yes, there's just a widening gap between metros that are doing well and those that are showing declines. And certainly the ones that are doing well are keeping that average positive. Like markets on the West Coast and in Florida are showing the highest rent growth, and those more in the Midwest are showing declines. And some markets in the Northeast are also showing declines. It's a pretty random mix, but we haven't seen a major correction in retail rents for this property type.
Okay. And one man's trash is another man's treasure, and it seems like some people are thinking it may be time to get out of retail properties, but when we take them to market here at our shop in the Southeast, there's a lot of buyers interested. So what are you seeing from investors as you look at the U.S. overall for activity?
Well, it's interesting. When I looked at retail property sales over the last 5 or 6 years, you see a lot of properties that traded that were development sites. So yeah, a lot of investors are eyeing some of these older properties and saying, hey, that would make a great industrial site, that might make a good hotel or multifamily. That trend has declined a bit. I mean, overall, property sales and development site sales has declined over the last 2 years. The retail properties that are trading as retail, meaning, they're continuing this trading, those trades have been fewer and far between as well, but they've been kind of all over the map. So the better properties are still trading for a pretty good price. The ones that are more remote have been trading at a much lower rate. So it's been a very mixed bag in terms of the retail sales.
Yeah, and that makes sense. And so let's talk about some cap rate examples. So these really nicer retail properties that are selling on existing income and tenant bases, what kind of cap rates are you tending to see on those?
Some of them can be as low as 4 or 5%, and others are as high as 11%. That's why what I'm saying, why I said that earlier, because I'm seeing cap rates all over the place, depending on how big it is, where it is, when it was built. So it's a real mixed bag. And because there are fewer transactions, it's really hard to get an average when your range is as broad as it has been.
Yeah, and especially when you said earlier that if these properties are really being bought for even more development or redevelopment or a change in use, and they're priced per pound, if you will, they're not really cap rate deals, are they? So what are some of the factors? You're an economist, you study real estate. What do you think is going to impact it moving forward, either positively or negatively, the retail sector?
Well, what's interesting about the retail sector is what the type of users going into those spaces. So the traditional, clothing stores and novelty stores, and certainly electronics, toy stores, bookstores, those aren't growing. Certainly clients or consumers like the new thing, so any kind of new concept. And we're seeing new concepts both in the grocery store world with Sprouts and all these other kind of newer organic foods, or grocery stores that have kind of an ethnic flavor to them. They are growing and expanding. There's other new concepts that are competing with like Target and Kohl's. We're seeing a lot of those users going into this space. But we're also seeing a lot of service providers and non-traditional retailers going into retail space. I mean, certainly like the urgent care, medical facilities are leasing retail space. We're seeing a lot of fitness centers, gyms, and niche gyms like yoga studios going into retail space, tutoring services, and even pet-related service stores like doggy daycare places. So what you're looking at is, I look at the retail sales statistics, and they haven't been very stellar because, so much of retail sales is e-commerce. But you have to look at kind of the other sectors, service sector type, like fitness, and that growth is pretty strong. so it's a real different tenant mix in these retail centers.
Yeah, that's a good point. If you're just looking at retail sales, maybe you're not seeing the real picture because there's so many healthcare tenants and experiential tenants in some of these places. Let's think about some things that could impact retailers and therefore retail real estate moving forward. You know, we had this great tax reduction, right? So employees, we've had more income to spend. Is that resulting in more spending and consumer confidence?
Yeah, I mean, I definitely think the consumption statistics are showing higher consumer confidence, certainly higher consumption. You know, job growth has been strong, so that also spurs further consumer confidence and further consumer spending. So I think the outlook should remain favorable. It's just how we're spending our money that you know, people like me have to really study. And again, I'm seeing a lot more in the service sector. You know, things like spas and nail salons. That kind of spending is higher, whereas spending on clothing and outdoor furniture is much lower. You know, remember, there's been a shift in the demographics. More people are living in the city, and so they're spending more of their money on those entertainment things, on restaurants. Certainly the restaurant growth is the biggest spending compared to, say, 5 or 10 years ago. And people aren't, because they live in smaller spaces, they're not buying as much stuff, not as much furniture. And so, you know, I think the outlook right now for the near term is still favorable. It's just a shift in how we're spending that money.
Yeah, that's a good point. And you know, I think we see it in every sector today. If you're an investor, lender, you're involved in real estate investments, is to look at what these tenants do and look at their sector. You know, we have so much changes in technology, in buying patterns, and you know, electric cars, and all the things that could change what people need. And I'm already seeing some investors shying away from some of these tenants that we may not need as much if we have a lot of electric cars moving forward. Are there, you know, there are concepts that you see kind of in changes in the economy coming down the road that we might want to think about related to retail?
Yeah, I mean, like new concepts like driverless cars. I think about it, but I can't envision how much it's going to change because it just seems, you know, so deep into the future. I do think this entertainment piece is definitely a shift in how, you know, I think, yeah, a lot of people are on their electronics more so than they were before, but they still want to go out. They still want to see people. So I think anything that's the new thing. I mean, the one thing I didn't mention, too, that we see a lot of leasing is these trampoline parks. Mm-hmm. So kind of taking kids out and indulging them in, you know, some kind of indoor arcade, or, you know, the ropes courses indoors, or the trampoline park. So that kind of, you know, new thing will always get good consumption dollars off the bat, because people want to try the new thing. But
you got to watch those businesses like that, right? Trampoline business, that could be a little up and down, right? Their business.
Exactly.
Baba boom, right?
Yeah.
So we're all going to be flying around in our cars like the Jetsons, right? Putting Fido out on the walkway. It's hard to imagine what's coming down the road. Well, what would you leave our audience with, Barbara, related to retail investment properties or retail property performance moving forward?
I mean, you have to look at the numbers. So don't always consider the doom and gloom that the kind of broader retail statistics might be telling you, because again, a lot of what the retail sales represent isn't really what we're seeing in the bricks and mortar retail space. So you have to really look a little deeper into the numbers, which is what we try to do on a regular basis.
Yeah, well, that's a good point. And Barbara, great information as usual. Thanks for joining us.
My pleasure.
If you'd like more information from Barbara, visit reis.com. That's REIS.com. And I think Barbara's got a great point there. When you're looking at retail properties today, you want to look at tenant mix and the industries and what they're doing. And we're seeing so much change in use with retail properties now building hotels and apartments and becoming mixed-use developments. So don't entirely shy away from some of these retail properties. there might be some great opportunities out there. Well, stay with us. We're going to take a short break. We'll have more on retail and retail real estate. I'm Michael Bull. This is America's Commercial Real Estate Show. Stay with us.